All right, everybody, welcome back to MattyMoolah. We are just going to hang out today, answer some questions. I was going to go live with Hot Chris. Chris need a little bit of a break. That's fine. We were going to talk about Tesla, but we'll do it next week. I'm really excited about that one. I think a lot of people, I actually maybe I'll find it because I think it's a good opportunity for people to recognize the things that Chris and I say. Because I think sometimes people just think we're crazy. I think sometimes people are just like, these guys don't actually know what they're talking about. And to be honest, we don't really, but we try our absolute best. And sometimes we're right. And I think this one in particular, we were right. It was when I was in um it was when I was in whatchamacallit. What's the word I'm looking for? Tennessee. So maybe we'll just pull that one up really quick. I'm actually kind of curious what that one looks like. Man, I have so many more live streams than I do videos. That's kind of cool. I think it was August time frame. MTV, Hymns, Dutch Bros, or Full Port, TSLY. Some of my video titles are absurd. Palantir, Cashflow Chronicles, 35X, End Phase. It was like right as soon as I started going full time. And I want to say Hot Steven joined us back then. Are you buying the dip? Is this it? Anyway, I need to find it. But overall, I just think it's a little bit interesting with what's going on with Tesla. And I think the writing was kind of on the wall, right? And I think it's going to be an interesting conversation that we have, whether it's on Tuesday, Wednesday, whenever we're able to get in the same room again. And basically just look at it. I think the problem that you're going through is, yes, they have a very profitable car business, but everyone's like, it's not a car business. Well, for the next 5-10 years, it is. So when you think about it in that respect, I mean, you're going to have to value it almost like a car company. But at what point did the valuations of those other segments matter? And, are they fruitful enough at this point to deem it necessary? So I think you're going to play this interesting role playing between kind of market caps and trying to understand having an imposter syndrome, as you're kind of saying. It's like, yes, you have this very profitable car business. It's able to generate a lot of cash. But as you ramp up the energy business, robots business, etc., you can't really fully value those things yet, right? So anyway, let's just hang out, answer some questions for you guys, and mostly focus on that. Apologies, I was late. So that's the whole reason why Cashflow Chronicles was canceled for tonight. I think Chris ended up taking on some Patreon calls. So for you guys that are interested in getting on Hot Chris's Patreon, be sure to sign up in the description below. There's a link to his Patreon, and it gets you access to the Discord. I hang out in the Discord from time to time, so you guys are curious, ask me more candid questions, feel free to do that. So yeah, feel free. June, what's going on? Dean Pierce, part of the Money Gang. What is going on, my guy? Hope things are going well. We got Midwest Cannabis. Oh yeah, let me get the little ticker in here for you guys. Isn't Matt just a divvy investor? I used to be more so just a divvy investor. Ultimate Package, far from, my guy. Joe's Place, good to see you, my friend. I haven't seen you in a little bit, so it's good to see you back on a live stream. This Tesla dip proves that all stocks go to their fundamentals eventually. We will see with that one. Thoughts on STLD and MIS? We'll take a quick look at those in just a second. Dan Harkness, what is going on, my guy? I'm very happy that you're able to catch a live. You're a new face to me, so very cool to have you on the stream. MOS. So MOS and STLD. Let's take a quick look as to what those are. MOS, Mosaic. I've heard people tossing this one around. And STLD, Steel Dynamics. I don't know anything about either business, but Steel Dynamics is has a pretty good chart. So let's take a quick look at those bad boys. So what do I think? Fort Wayne, Indiana pays a little bit of a divvy. And Mosaic is a potash company, which I assume has a lot to do with uranium. Both are relatively cheap for their price to earnings, but is that because the earnings growth? This one not so well, down 50 odd percent in the last year. I don't know why. It's an interesting one. So it does a lot of fertilizers. Sorry, potash. I don't know why I was thinking of the nuclear industry. Yeah, it has a lot to do with fertilizers. Interesting. Well, I don't know much about them. So if you have any thoughts, like what's the question around it, right? Um, is the question like the profitability, the valuation, and then maybe I can think about how to answer the question a little bit better. Geopolitical play if shit goes over China. Oh, okay, for fertilizers and stuff like that. I assume for MOS. Or are you saying for the Steel Limited? That's more of a geopolitical play because I know they produce a lot of steel over there in China. So what's up? Do you think about Aduro, like Aduro Clean Technologies? So Aduro Clean Technologies, a buddy of mine, um, Ryan, independent investor. Him and I used to do some live streams together. Great guy. He's been looking a lot at Aduro Clean Technologies. To me, I have yet to really see the. It's not that I dislike or anything like that. I think that there's potential with the organization. The thing that I'd rather see is maybe a little bit more execution from the company in terms of revenue, and that kind of gives me a head scratcher because every time I see one of the videos, it needs a little bit more like actual execution involved, and maybe it's a little bit too proprietary, and so maybe they don't want to show it on screen. But I haven't looked at it in a few quarters. Maybe it's appropriate to kind of take a quick look at it and see if they have any um, revenue or anything like that. I had one of the biggest investors on the channel on here probably a year ago, maybe more. Maybe it was in 2022, but I'm really curious. This presentation's 6 months old now. And I know, I'm not the spokesman. I'm not up to date, but I know um, Ryan from Independent Investor, he's done a lot more looking at Aduro. But for those of you guys that don't necessarily know, it's basically taking plastics and, whether that's coming from recycling or anything like that and turning it into usable items, right? To be able to help recycle those plastics or use them to turn into oil or bitumen products, and that's basically what the thought is. And so you have a bunch of other businesses that are really looking at things. So what this is basically doing is um, doing a chemical reaction and mixing it with heat a little bit to be able to get it to a place where you can utilize some of those things. And so the hope is you'd put this on an island, um, some sort of like recycling place or petrochemicals company, and be able to help supplement. So the thought process is you have about 25 tons of plastic a day, you put it in there, you get a little bit of OpEx, some revenue in there, and you end up making, some money. And that's kind of the thought process with it. So then they're basically trying to be a licensor, right? So they come up with the technology, then somebody else kind of pays to have it built and stuff like that. They have been approved by a few other companies. But in terms of like, see, this is the thing is, it's like I don't actually see the actual equipment running per se, or like it's not a problem that I see yet. But like they're currently still in this cash burning phase. It says they're going to start generating a little bit of revenue later this year. So my question is until I start seeing a little bit of more revenue, right? It's hard for me to kind of really get excited about anything. I don't really do the pre-revenue thing. Maybe I do with like Accelera, but I've seen the business model work a little bit. So, and then NEXT, I know how NEXT works, right? I'm not talking badly about it. It could be a great opportunity. It's a rather cheap company. Like I think it's less than $100 million in terms of costs and capex. So it could be $1 billion or multiple $1 billion opportunity if it ends up doing well. But we'll have to see what ends up happening with that one, and we'll have to check in with time. So Mosaic has been bobbing around nowhere forever. Fertilizer companies are all the same right now. Always adding to VTI, been more and more adding to Amazon and Google. I'm a fan of those as well. Dumpster diving, fertilizer companies. Yeah, CamV is an OG. Same with Midwest Cannabis, man. You should jump in on Archer Daniel. Might be a good play for fertilizer, I assume. June knows their fertilizer. Am I in Devon or Marathon? I am not in Devon or Marathon. They're rather cheap. It's just right now, it's an interesting kind of time in the oil industry, right? It's like you either have, it's like everyone's getting traded on such multiples that are so cheap right now that it's hard to really kind of like dive in. And I don't really know if oil prices are going to skyrocket from here, if there's any sort of ongoing issues in the Middle East, or so it's kind of difficult to really understand exactly where some of these companies are going to go. But if you were to ask me, these companies are sizable enough now that they're probably looking for acquisition targets. And I know Devon, last time I looked at their production, it's like 50-50 oil, and a lot of it coming from from liquids in the Permian, and they're down a little bit, like they're down 30 odd percent or something like that. So let's just take a quick look at Devon Energy Investor Relations. I think it's not a bad play per se. Like for right now, $27 billion market cap. And I think that I'm curious what they come up with in terms of earnings on a pretty regular basis. So let's just take a quick look. So these guys pay a variable dividend. That's pretty cool. Fixed and variable. That's pretty awesome. Production growth. They generate a crap ton of free cash flow. So I'm really kind of curious where they're ending up. So they bought WPX many moons ago. So let's see. Yeah, so they're in. This is what I was kind of saying. Like 50% of their production, actually more, comes from the Permian. So they're really Eagleford's undervalued, man. I think a lot of people don't really use the Eagleford as much. Anadarko's. This is where I started actually as an intern back in the day in the Anadarko Basin. Powder River. I actually did some work at school back at Penn State in the Powder River Basin, looking at that. So multi-basin portfolio, but the majority of their production comes from the Permian. So they're like 50-50 oil, right? So it's kind of what I was saying. They have NGLs. This is a lot of liquids, right? So 75% of their portfolio is liquids, 27% gas. That's pretty badass, right? I mean, really situating themselves well. A lot of this Permian, Delaware Basin stuff is going to be oil specifically. So when you think about it, let's just do that quick math. So calculations, I think that's exactly 2/3. Calculator, what the hell? So 440 divided by 650, yeah, it's 2/3. So 2/3 of their production comes from the Permian. So that's pretty badass. Free cash flow of over 900 million. So that's about 3 to 4 billion in cash flow, free cash flow. So let's take a quick look. Yeah, so 3.2 is what they're looking at for this quarter, or this year. They were at 2.7 last year, estimated. They're going to be at 3.2. So they're trading at like a price, the free cash flow of about 10. I think that's pretty reasonable. Not bad. Let me do some quick math here. So their Permian assets alone, do some quick math. 27 billion divided by 440. So if you just look at their Permian assets alone, they're trading about $61,000 per barrel of oil equivalent. But I guess if you were to look at their whole portfolio, so 27 billion divided by 650. Trading at about a $41,000 a barrel. It's not awful, my guys. Yeah, it's not awful by any means. That's pretty good actually. I guess my question would be is like, are they going to continue to grow that, right? Where I could see it really blowing up is, yeah, here you see it. 11% free cash flow because they're trading at, let's just say 3.2. So 3.2 divided by their 27 billion market cap. Yeah, you get to 12.7% or 11.8%. Yeah, sorry. So, but don't take this like immediately like verbatim, right? Because when you think about it, oil industries generally trade at single digit PEs because the oil price right now could easily go to 60, could go to to 50, right? So if that's the case, it's 8% free cash flow at $70 and $70, let's just say it's between 8 and 11, between 70 and 80 bucks. So if it drops below, right, this eventually is going to get to the point where it's like, looks like for every 10 bucks, it drops 3. So if it goes to 50, you're basically $2 or 2% rather free cash flow yield. So no bueno at that point. So it gets a little tricky when you start thinking about it. So I don't know. It doesn't look bad per se. I'm really curious to see if somebody buys them out. Um, I'm just really wondering if they're going to continue to grow at a very fast pace, right? Because if you're able to grow your Permian, there's two really big players. There's Chevron, and there's Exxon in the Permian. And so if you're able to continue to grow in the Permian, then you're looking pretty bueno. Um, yeah, I was curious if they had anything specific about like Exxon or anything like that. So they raised 20 cents per share and then 50% variable dividend. I actually don't mind the variable dividends. I really don't because I have a variable dividend company, BHP, and BHP, they pay a variable dividend, and I love that. Thanks, Steve Lynn. Yeah, for those of the people that are probably somebody was just like, Matt, you're not doing enough XYZ, and um, so I don't want to say I blew up at someone, but I was like, man, you don't understand, man. I try to go live every Tuesday through Thursday. I try to do 1 or 2 live streams on the weekends. I do Palantir Weekly every week. It's like I do all this pretty much for free. Yeah, like Chris and I have made maybe 450 bucks from Cash Flow Chronicles, but we split that in two. And then you have to think we've done 67 or so episodes now. So that's 67 hours. So we're making about $3 an hour doing that. So and I'm not complaining, right? But like when people start just like piling on, like you're not doing enough, try this, try that. It's like, dude, like you've never launched one video, like, and I try to do it every day pretty much to an extent. I don't make videos every day, but I do stream as much as possible, and I'm active on Twitter and try to answer people's questions. So it's like sometimes you get a little frustrated, but I think overall I'm like in a really good mood today, and I really try to come on and help people, and that's all I can try to do. Hot Times, the richest man in Florida. Looking at senior living well is a great play with a good dividend. Been in since 2007. That's not a bad. I mean, I know a lot of people that have been involved in that one. I'm kind of out of the dividend game now, so um, nothing wrong with that. We need to do a whole episode on oil. Nobody ever shows up for the oil streams. Like I've been talking about oil and people left. So nobody ever shows up. Like there's very few people. The people like that love oil are very fanatical about oil, love it, right? But at the same time, most of the people are like, oil? We don't use oil anymore. It's like, really? Because we still use 100 million barrels a day, right? Like it's very funny how people live. But SoFi is on Monday. Very curious. We saw our guys. I'm actually curious. Let's bring that up. I saw our guys over there. Why is this still sharing? I saw our guys on SoFi Weekly. doing their stream tonight. What's going on? Let's check out Tevis's channel. Man, they got everybody. No wonder nobody's over here on the MattyMoolah. Nobody's over here in the MattyMoolah channel. Let's check this out. What do they got? Can you hear that? Let's make sure you can hear it. Share screen. Also share audio. Very good. Let's see what they're talking about. Let's listen in for a sec.
Have changed since then. The probability for rates have been fluctuating. It was supposed to be going up on the chance of them cutting.
Talk to me, Daddy.
Things have been changing very fast. So, Chris, whenever it comes to new originations, personal loans, student loans, home loans, what are we doing here? How are we getting?
This is my guy.
Giving away all these.
Hot Steven, man.
Are we selling any? What's going on?
That's my guy. They're all good people. Make sure if you guys like Tevis is my guy. Met up with him in Vegas. He's a really cool dude. Still haven't met Steven in person. Maybe when I go home to Pennsylvania to visit family, I'll check him out. I had lunch one day with Crossroads. Real cool guy. I think Chris might actually be in Texas. So maybe one of those days I can go over and take a quick look and see what he's up to. I think he said he has like 18 kids. At least that's what he says on Twitter. That's a joke. It's not 18, but he's got a lot of kids and he's living life as a dad and he's doing a good job of it. And I really appreciate his insights. He's a smart guy, got good head on his shoulders. And Tanner, he bought a house up in Canada and I don't foresee myself going up to Canada anytime soon, but I might. You never know, especially to go to visit that hot Tevis guy. I could say a lot about Tevis. No, I give him shit. He's a cool guy, and it was really cool. I played some crafts with him. I played some crafts with TJ. So overall, very good. Actually, play that. I know. Chris Patel is the Celsius king. Not really, but I took an opportunity to sell out of more of a dividend-paying ETF, and I took that opportunity to buy Celsius. A in the money HLEEP, as we call it, a HLEEP. So I bought an in the money HLEEP, and with that in the money HLEEP, I decided to write a call on it and to collect a little bit of income. So I think I bought this $50. Okay, good. So I bought this $50 at about $20 or so. And right now they're kind of trading anywhere. They stopped trading, I guess, at 1950. So I guess I'm down $400 on that. But then I turned around and with that, I wrote, I want to say, yeah, I did it because the earnings come out in March. I think I turned around and did like a $60 or $61, $62 or something like that. Covered call. And I think I did it for like $1.20. So they're currently trading for about 100 right now. So technically I'm up about 15-20% on that bad boy. So I could close that. But the hope is, right, is I bought, let's just say this HLEEP out here at the $20 range. The break even on this is going to be about 70 bones, right? So my hope is with this opportunity that I'm taking, I wrote $1.20 off of it. So let's just say now my break even is really $69, right? And that's not this number here, but this is just the 20 minus the $1.20 that I sold it for. It's like 1880, something like that, right? So it's in the low 19s probably. So now instead of it breaking even above 70 like it was, it's now breaking even below $70. And my hope is like on a monthly basis, if I'm able to continue to chip away $1 or so, I have 24 months really for this to come to fruition. I'm not going to own these things for free, right? I don't anticipate owning these covered calls for free, or sorry, not covered calls, these long calls for free by chance. But my hope is like I'll be able to chip away so that it really gets to a point where it's not bad. I have a feeling that this thing, it was trading in the 60 to 65 range not too long ago. I have a feeling this thing in the next 2 years will probably do pretty good, especially after the Q1 earnings. These guys are growing at a very fast pace. And so with that, I think I think it's a good opportunity. I wouldn't be rushing if it was like 60, $65, but I think down here in the 50s, we've been adding. We have about 5 shares in the public account in Cashflow Chronicles, and then I have taken this opportunity. Chris got some really good actually, that's for his Patreon. I don't want to divulge that as much as I would love to like talk more about it, but anyway. So, Mr. C, what is going on? You guys stay grinding. I appreciate that. I love doing this. Like Chris was like, I need to take a moment after having one of these calls. And I was like, dude, I get it. That's cool. I was like, I'm going live though. Like, so I love hanging out with you guys talking and shooting the shit. Suggest eating it. Like, oh, you're talking about fertilizer still? You guys are out of control. Mike K, what is going on, my guy? Glad to see you. So Cam, hey, wish I could get 3 hours of talking with some homies about stocks. Hey man, it's better than $0. It's better than $0. That's for damn sure. I'm living the dream. Talking about stock getting paid. Slumberjay, you're a big Slumberjay guy, huh? You need my expertise. It's a gamble, man. Even if you like evaluate a company perfectly, right? It's a gamble. And I guess my unsubscribe, my guy, it's fine, not a problem. Even if you evaluate a company perfectly, it really is no telling, company could be trading for 5x 6x earnings and it stays there forever, right? I think it all depends on, is the company growing, is it shrinking? And so you have to think, like, especially if rig counts are going down and stuff like that, like there's so much ingenuity you can do without adding continued capital. So I would just, if they continue to grow, might be an opportunity. I just don't know enough about their capital programs and stuff of the like to really get after it. And I'm just a firm believer that the world is awash with oil right now. So if you kind of think about how many different, like, if we continue to lay down rigs, maybe the price will get propped up because you're under investing. But I mean, the world is just so flush with oil at this point that it's a very fine margin. You sold all your oil stock and bought Palantir a while ago. That's awesome. ETF FaceTime, my guy. Hopefully you're doing well. Do you like Chris? He works in your industry, kind of. He works in, I don't want to like out him, but I think he said it publicly. He works in like carbon storage. So yes and no. Yeah, I mean he works carbon storage. I work in producing hydrocarbons, so it's a little bit different. But you trade options so you can put it all. You're all stud muffins. That like button gets mighty lonely. That it does sometimes. Wouldn't be an oil long term. I could see that, man. I think it's a cyclical play, right? Cyclical play. Deep Value 47 is posted Palantir is appointed the 6th government prime contractor. Well, that sounds pretty dope. The YouTube finance community is almost 100% male. That's because we need you to recruit more ladies, Miss June. If you meet some ladies, be like, hey, I know some guys. They live stream. Got to get them in the chat. I've actually thought about that. If we find somebody good enough, not good enough, if we find somebody that loves talking enough and being on camera and wants to come on, I'd be more than happy to like include them and share some of the profits, which there aren't any right now, but eventually there will hopefully be. Yeah, butt fucker. What's going on, guy?
Stop, dude. I couldn't leave you hanging, man. I got on Twitter for a few seconds and I saw you went live. I was like, oh man, he's doing this by himself. Like, I can't do that to my partner. I gotta be
on. Man, no, you don't feel bad.
Nah. I'm just, you know what it is? I had 3 back-to-back Patreon meetings today, and I stayed up to listen to the PayPal announcement. So it's just tired, man.
That's late for you, man. Yeah, it's 12:30 your time.
Yeah.
So
it's all good. It's all good, man.
What even was it? Like all I saw was the 30-second video from Alex Chris, and I was like, is that it? It's like
I mean weak. It was definitely one of those things that just the promise was overpromised and the delivery was a little underwhelming, but I'm never one to judge based on just an underwhelming delivery. I'm a numbers guy. So I want to see like how is this thing going to actually play out later on? You know, like, is
Mm.
this something that actually makes money? So,
Mm.
you know,
Very interesting. I just talked about my my Celsius play that I did. I didn't divulge what you did because that's Patreon eyes only. But I was just telling I shared a video in the Discord where I bought the $50 long boys, and
Yeah.
I'm looking to hopefully
I bought the $65 ones. So the
photo again.
$65 calls for 2026. Yeah. So I bought them at around like 1388 and 14. So like I kind of just knocked at them a little bit.
Yeah,
The goal for me for this one is just to let it ride up and then probably sell the higher call to create a spread on it, but pretty much just, yeah, I think this one's a quick recovery. I think it goes up. Earnings is coming out next month, so
yeah,
we'll
March
see.
1st, man. I wrote.
Yeah.
I think I'm gonna write just like a monthly covered call on it and try to capture, 5% of the premium every month off that original. And like you said, like eventually if it gets called away, like I'm not going to be that upset, right? Because it's like if it runs to at the end of February, if it runs to $60, then those leaps will be worth, probably $6 more than what I paid for them, if not more. So
Yeah.
I'll let them get called away, and it won't be that big of a deal.
I the
But
one
my thought is
yeah.
it'll be fine.
The one thing I'll just tell people who are on a little bit of a, how do I say, well, Celsius has already risen so much it can't go any further, is that this is a consumer packaged goods company. They have an endless stream of clients and customers that keep getting refreshed. So for them, it's just about incrementally adding, right? So this way they can go. They have a very asset light business model where they don't necessarily have a lot of stuff that they have to do. So they're almost like a SaaS like business. So their growth is going to be SaaS like. The distribution is done by Pepsi, the manufacturing is done by third parties. All they're really responsible for is branding and marketing and new product development. And so if you look at their financials, which, you know what, I'll just bring it up real quick. It's, and then we could do a quick comparison against Monster. That's the thing that really should drive people to it, So CEO, let me just bring it up real quick, so this way we can quickly
Actually, it's
analyze.
a funny story. I was walking back to my desk today at like 4:00, and my VP looks at me. He's like, "I got to talk to you." I was like, "Oh shit, am I in trouble?" And I still have yet to have like the full on conversation. He's like, "You didn't tell me you were Matt Money," and I'm like, "What are you talking about?" Like, because some people at work started calling me Matt Money, and he's like, "You got 12,000 followers and shit." I'm like, "Oh god." He's like, "We have to talk," and I'm like, "Oh no." I think it's just about he just was, because I think I helped one of our managers with like buying into some of the good stuff, and I told him like Palantir's at $22. You should probably sell. Like I'm doing stuff like I'm helping him trade because I know that's what he is. He's like a trader. So word is just getting around, and I'm like, oh man, like I hope
you gotta be careful, bro.
I'm like, yeah, I'm like, I don't want HR pulling me in, being like, you're too influential. And I'm like, influential my ass. But anyway. I'll let you go off.
So if you look at this is Celsius Holdings quarterly revenue numbers. Okay, not TTM, quarterly. You see this right here? How crazy this growth is, right? You see this downward move in December. This is seasonality. Typically, their Q4s have a little bit of seasonality to them. And so a lot of the analysts that were talking, they're looking at Nielsen numbers for Q4, and they're like, oh my God, like these guys, their growth is slowing down. And that's why you need to sell. And they gave a sell rating. But what they didn't realize is that the seasonality impact is going to impact them for Q4 numbers a little bit, and that's what Nielsen is showing. People are not exactly in the zone to go buy a ton of energy drinks during the wintertime. It's just a natural part of the cycle. But that doesn't mean that demand for their core products isn't through the roof. Because if you see this, look at this. It just recovers really materially. And now if you do it on a TTM basis, you can see the growth rate, how fast it's growing, right? On top of this, if you look at their financials in terms of operating income, they're growing their operating income even faster They're almost generating 105. They did 105 million operating income last quarter. And on a TTM basis, it's close to 182 million. So you multiply that out, these guys are going to be doing
they're
crazy
probably
amounts of growth.
they're going to end up being at a 30% margin, maybe more. So if they
Yeah.
just double because if they're at 182 in TTM and they made about $1 billion, and they're just getting really to a big piece where they're starting to get profitable, I'm anticipating when they get to $2 billion a year in revenue, which I wouldn't be surprised happens in mid 2025 timeframe in a run rate, 2 billion in run rate, probably 500, 600 million in operating income. And if you think about it, it's an $11 billion stock right now, maybe less. I don't know. Let me see. So,
and then you look at this, which is Monster, right? Monster has been one of the best growth stories in the country. The key to Monster, though, is that look at their growth rate. They've been consistently growing at 10 to 13% per year, every year for the last, decade plus, right? But Celsius is relatively new to this. The thing to remember is that the industry itself for energy drinks was a lot smaller in 2008 than it was in 2022. So what ends up happening is that every incremental market share gain that Celsius does, it's in a much larger pie. That's why their growth rate is so high, because they're taking market share from other incumbents. So I think a lot of people are looking backwards a little bit and saying, well, how much could they possibly gain? No, the energy drink space is a much more mature market today than it was 15 years ago. So if you think about 15 years ago, not as many people were drinking energy drinks. Now people drink these things like it's water, So, and the industry itself is still catering at about roughly 15% per year, between 10 and 15%. So, and then, like I said, you look at Celsius, this is Celsius's growth rate, 100, 140, 73, 42. So you can see here, this was the Pepsi distribution deal that they made in 2022. So that's when this was growing. But if you look on a quarterly basis, they're accelerating their growth, or they're maintaining it. They went from 65 million, but prior to the deal, the Pepsi deal closed in March and really started to get ramped up in December. Now they're close to almost 200 million. Dude, by the end of 2023, they're going to be doing about 3 to 4 billion in sales by 2026. So if you take Monster's valuation, when they got to,
you're good, take your time.
When they got to about close here to 3 billion, right? What was Monster's market cap in December of 2016?
Well, I don't know. Let's see. Monster. I don't know for sure.
Well, let's take a look.
Like the stock price. 2016, it was $22 a share. So probably about half what it is today.
Right. And what does that mean? How many billions is that in market cap?
About 26 to 30.
26 to 30, right? So Celsius is about 11 to 12 right now. You see what I mean? Yeah. If they're going to get to that level with the same profitability and same metrics, they're going to be valued around the same thing. So it's an easy double. So, just logic. Even if you discounted them, you can
around 20, about 25 to 30 billion at that point.
Yeah. So let's be conservative. Let's say they get to 20 billion in market cap, right? What does that mean for Celsius stock?
80% bump before any dilution or anything like that. Because you're going from about 12.5 billion, increase it by 80%, you're at 20 billion.
Exactly.
And that's the hope, right? Like and somebody asked about Dutch Bros earlier. Like they were like, would you rather do Celsius or Dutch Bros? I think that you're going to have a much quicker hit in terms of return on Celsius. Does it top out at 20? Does it go to 25? Does it go to 30? I don't know. But for me, I'm not holding Celsius for like a 20-year play. Maybe I will. I mean, I guess right now I'm in it for a 2026 play. So I'm in it for at least the next 26 months or 24 months rather. But the thought process for me is that you're going to see a quick rebound in the stock from this one after you get 1 or 2 more quarters under their belt. People are going to recognize that, this thing is
not
still
slowing down nearly as much.
It's still chugging along. And at the valuation that it currently is, if you think about it in this perspective, not too long from now, you're going to be making $600 million in operating income. Even if they just hold flat based off the numbers that they're making, they're going to probably make 250 to 300 million in net operating income. And they're a $12 billion company, right? So that's probably a PE of 40. So if you think about it, give it 2 years at the growth rate that they're going to be making 600 million in net income. And that's what, a 20 PE. So very cheap, right? You just cut the valuation in half just because you're growing by triple digit growth, right? So I think it's interesting. That's the reason why I'm looking at it, and I hope other people do the same. I think it's reasonable to kind of see where it'll be. Well, I'm anticipating it's probably going to grow anywhere between 75 to 100% this year compared to last year. Maybe that's aggressive, but just some quick over the off the dome numbers. That's kind of what I'm thinking. 100 might be on the upper end for sure. But 75, I don't think is out of reach in terms of year-over-year growth. And with that, I mean, you're looking at close to 1.7, 1.8 billion in revenue, and you're probably going to walk away with, I don't know, what's 25% of that, 1.7 times 0.25. Yeah, 400-ish, 450 million. And I wouldn't be surprised if their margins climb to 30% on a net income basis. It might. So it'll be a good one. I think quick turnaround. You think about that. Even if you were to do those numbers, 12.5 divided by 0.425, you're looking at a 29 PE for this year's earnings, and it's growing at a huge run rate. So that's my thought.
And like I said, the distribution channels for Celsius via its deal with Pepsi only started in the latter half of 2022, with 2023 being a transitional year. You're talking about so many endpoints getting access.
Plus Canada, UK,
plus Canada, right?
All those
Ireland,
new markets.
All of those new markets will add to the top line growth as well going forward. So it's just an easy. To me, this was honestly a no-brainer. I mean, there's a lot of other little DD that I'll post on the Patreon tonight, so definitely check that out. But yeah, I
would have loved. I would love to get it at 40, but my fear is it won't go to 40, and then you'll miss out. So I'd rather be in it and lose a little bit by perfecting it and timing it. And just, I saw 53 bucks, and I was like, this is a good opportunity, right? I was thinking about it. I talked to Tevis about it a month or two ago, and then it climbed back up to the 60s, and I was like, damn, I really wish I had bought it. And then boom, the opportunity's here again, and you got to take advantage of it sometimes when you see it.
Yeah. Well, the thing is, like, these sudden drops, they're pretty opportunistic with long-term leaps, where you can actually get the leaps for a pretty decent discount, right? The way that leaps are modeled, and especially like the market makers end up doing their stuff, is a little bit, in my opinion, a little wonky. So you can take advantage of this mispricing, and that's what I'm doing right now. So
you mean just because the spread is so much sometimes?
No, well, because what happens is, I'm not going to go too much into the formula behind it, but the key concept to remember is how long-term options are priced. They're priced using a model called Black-Scholes. Black-Scholes is pretty garbage way of measuring things, and it leaves a lot of room for guesswork. And instead of focusing on fundamentals, that guesswork leads to a lot of contracts that are being sold at a very discounted price. So, so I'd say, the way that I would frame this is, Matt, what's the weather gonna look like this Saturday? You could theoretically give it to me pretty accurately, right? They're like, I'm seeing the rain. I said, I think it's gonna be pretty consistent. I think Saturday's gonna rain. So you can make an educated guess. Now, if I asked you, hey, Matt, what's the weather gonna be like 2 years from now? You have no clue, right? But there could be extrinsic factors that you are aware of today that you could use to find out what the target is going to be way out down in the future. That's why near term options are not as mispriced as something that are way more out there. So long term options are usually very mispriced relative to the potential of the company that it has. So that's what I typically we'll look.
I was honestly just surprised because I was looking at the 60s, 65, 70s, and I was like,
Yeah.
this thing's holding its value, even if you go very, very far out. And I think it's just because people are so confident that it will turn around and it'll end up being a good one. But yeah, somebody was asking me about Dutch Bros. So do I think Dutch Bros I still hold? I think that one's going to be longer term though, right? Like that one's not going to be growing. I think the revenue growth for that one will be 25-30% this year. But you have to think they're coming off of a very firm base already, right? They already have their franchise business and they have their normal business. So I think they're up to 800 stores in total at the end of the year, and I think they're going to try to increase it to like 950 this year before the end of the year. So fingers crossed they're able to do that. They put out a statement so they're going to try to grow by 150 to 155 stores. When you look at a company operated basis, that's a pretty big growth rate, right? The company operated is like 500, 550 stores. So when you put that together, that ends up being 20 to 25% year over year growth just in the store count. So you have same store sales growth, and then those stores will generally after 4 quarters be cash flowing, 30% margin in pretty quick succession. So that's operating margin, by the way. That's not net margin because obviously you still have to pay for a lot of that other stuff. But I think it'll end up doing well. I'm very curious to see what happens, but it's going to be a play where it's going to take some time for that one. But yeah.
Can you share my screen real quick? Because this is the thing that's, I guess, the most. If you've ever run a business, one of the things that you'll know that you have to deal with a ton of counterparties, distributors, and everything else. With CPG, it's like another level. So CPG is consumer product goods. Consumer product goods, there is an entire logistical network that needs to be built out in order for you to succeed in the CPG space, right? So as an example, let's say you have to hire truck drivers, you have to hire warehouses, you have to hire storage places, you have to go to all the gas stations to make deals with them to put your product and place it in a place where it has the highest levels of visibility. You have to work on pricing, you have to do this, that, and the other goddamn thing. And that the entire process of doing that takes years, if not decades, if you try to do it organically. But if you have a partner like Pepsi who already has deals with all of these guys, you don't have to do anything. You literally just say to Pepsi, hey, you're my exclusive distributor for North America, right? And now Pepsi does all the stuff for you. They have all the trucks. They do all the deliveries. They put everything in the stores, in their what are they called? The coolers, right? Now you're not having to deal with all that organic build out yourself. You don't have to worry about hiring truck drivers. You don't have to worry about putting trucks. You have to worry about building additional warehouses. All you have to worry about is working on the branding, working on the marketing, and working on the innovation portion of it that gets people fired up, right? So instant access to all of this stuff now because of this Pepsi deal. And the cost and the complexity of managing all these distribution points is now going to be basically shaved off. And instead, you're going to just deal with Pepsi, just one company. This is where the alpha is for these guys, where now they have access to all sorts of coolers, all sorts of places. And it's amazing, man. It's really amazing how much these guys are going to grow. On top of this, they do have some organic channels that they're going to be putting their products through, but they're executing on a whole nother level, dude. So I don't think that the growth rate is going to slow down anytime soon. I think the gift that we've been given by these analysts, are they giving equity to Pepsi or paying them? Pepsi bought a stake in them. I think almost a 8.5% stake via preferred shares. So right now, Pepsi gets the benefit of Celsius's growth. Celsius goes up, Pepsi gets an equity boost in their ownership. And I wouldn't be surprised if at some point Pepsi just says, fuck it, here's $20 billion. We want a high growth business that's generating a ton of money.
Because they paid $3-4 billion for Rockstar. And now
$4 billion.
$4 billion. Yeah. And it was like, even after they bought Rockstar, like I see less Rockstar than I did before they bought them. And it's very confusing. Like, did they buy it just to like get rid of it? Like, it was very interesting.
Yeah.
That whole piece of it. But somebody asked about Rumble. Do you know anything about Rumble and that stock, or not really?
Not really.
I've somebody who always, no matter what, will ask me about Rumble, and like I'm curious if somebody out there can really give me some thoughts as to why it would be a good opportunity. So Rumble, for those people that don't understand, it's a competitor to YouTube, and they're a little bit less restrictive when it comes to certain types of content, whether you're extremely far right political, far left political, you curse a lot more, you might be super against certain types of, I don't know, it's generally for like red pill people are on there, and it's kind of like a subscription based sort of thing, kind of like what you can see. It's kind of like a combination between Twitch and YouTube to an extent. So I see a lot of people that get demonetized on YouTube because their content go over there because it gives a little bit more. But there's some people that are really like thinking it's going to blow up. So right now it's a $2 billion company. Year-over-year revenue, this is where it irks me a little bit. Year-over-year revenue growth, 64%. So you'd be like, okay, that's really good. $18 million compared to the $10 million. Their average watch time is up a little bit, 58 million active users, but when it comes to the actual quarterly financials for 2023 compared to 2022, at this point, yes, revenue's gone up 60 odd percent, but so have costs drastically, right? So 12 million versus 39 million. General administrative has gone up 200%. Research and development's gone up 200%. Sales and marketing's gone up 118%. So it's like, it seems like it's not really coming through at the moment. And I'm trying to like scratch my head and understand it a little bit, as to why people think that this is going to be a good stock. Like, it might be a great opportunity to like watch on stuff in Rumble, but now I'm kind of like confused, and maybe I just haven't seen enough of like their long-term plans and where they think it's actually going to grow. But I don't understand how it's losing so much damn money. Is kind of where I'm at with it. You're on mute, my guy.
I think this is a Joe Rogan Spotify kind of thing with the whole Dave Portnoy deal. But let me dig into them a little bit.
Yeah.
That's the thing.
That's the thing. I'm not putting it down. I'm just really curious because I know a lot of people that have moved over there. Like, a lot of people that get demonetized on YouTube will go over there.
Wow, that's interesting. Futbucker put it right there. They built their own infrastructure. That's why. No AWS AK. They can't be taken down like Parler did. Interesting. That is very interesting.
Yeah. So it's so you can kind of be more yourself, right? You don't have to be PC. You don't have to. So they're paying a lot of content creators to go to the platform. So
maybe I'll have to do more research on.
Yeah, so I'm sure Andrew Tate. Andrew Tate's over there. You have a bunch of red pill guys, like Fresh and Fit podcast. They have a pretty big podcast. They're over there. So
see, the problem isn't so much on the monetization, like in terms of like getting people to view your stuff. It's who are your counterparties that are actually going to do the advertising on your platform, right? So, the Fortune 500 big time companies, they have to advertise on your platform. So when you have the Andrew Tates of the world, when you have these guys on there, if Amazon or any of these Google or anything else, they're not beholden to the viewers. They're beholden to their advertisers. So, if you can get people based, and I'm sure that there are a segment of the advertising market that is built for more, free speech advocates and right-wing views and all the other stuff, but a lot of people are not. And so that's why, you're probably not seeing a lot of growth on the top line, So the content is one of those things that, can make you or break you. So I don't know.
Yeah, it's just one of those things. I'll probably keep an eye out for it, but I'm not rushing.
Yeah.
To go up and buy. And I think the problem is because I don't know. YouTube's a pretty good beast, and until I see this actually start digging into market share, it's pretty tough. But I might listen to a conference call or two Try to understand a little bit more about where it's headed.
Yeah.
So cool.
All right, dude. It was always a pleasure.
Yeah, man, appreciate it. I'll probably just look and answer a few more
Yeah.
questions and sign off myself, but appreciate you hopping on.
Thanks, man. Take care.
You're the
Have a
man.
good one.
Talk to you Tuesday.
Bye.
Cheers. It's what? Yeah. Celsius 8%. Owned by Pepsi. Talking a little bit about. Yeah, I'm really curious where it goes. I've some people that always ask me about it. Yeah, other than that, I'm trying to think if I made any of the moves in the markets. I have not really. Other than that Celsius purchase today. Might make. Trying to think if there's any other cash opportunities at the moment. A lot of other cash is kind of tied up in cash secured puts on Rocket Lab at $5. So I'll probably just keep riding that out. Or maybe I'll just let it expire in the money. I don't know yet. So I don't know. We'll see. But other than that, yeah, there's a few like I watch Fresh and Fit because I think it's so funny. Like some of the answers that some of the people and the guests on there give, and actually, believe it or not, like some of their actual just like money making podcasts are actually pretty good for the folks that are like literally just looking to get into a little bit of the money side, right? Creating money out of nothing versus kind of stocks and stuff like that. Stocks are great, and but at the same time, there's a lot to be said about just being able to talk about making money in businesses. And they bring people on that do drop shipping. They bring on people that have done real estate. So it's pretty cool. But hey, for the 50 odd of you that are on watching tonight, please do me a favor and check out Cashflow Chronicles TV. That's where eventually Hot Chris and I will be live streaming in the long term. So let me just put a link in the description, or actually the chat box here to the right. If you could, please take an opportunity to go over there, subscribe, watch some of our latest episodes. If you're new, I know that we have turned on subscribers only for the chit chat here for people that have been subscribed for more than 10 minutes. But for those of you guys that have yet to subscribe to Cashflow Chronicles, please do me a favor and do so. Would love to continue to see that grow to over 1,000, and eventually Chris and I are halfway. We're at 582 subscribers at the moment, and then we're close to 2,000 hours and just watch content. We grow about 30 to 40 hours a day and watch content. So if you guys could, beep, glad you're doing well, my guy. Glad to see you back on the stream. I was wondering, because I haven't seen you in a while. I was literally like a couple weeks, actually. I was wondering, I was like, did somehow like I accidentally right click? And Futbucker, thank you so much, my guy. I was like wondering, hey, Rebecca, glad to see you. I was like wondering if I somehow like accidentally, there's 3 little dots on the side of your name. And if I click them, it'll accidentally it'll either put you in timeout or ban you. And I was like, did I accidentally ban her or something? I haven't seen her for so long. So, but yeah, would really love to see you guys over there. And if you guys have any last minute questions, please ask. Otherwise, I'll probably just call it a night. I'm pretty tired. The past 2 days, I've been working up early at the office by 7 and then getting home a little bit later. So, if he blocked you. Yeah, it's funny. Joe's Place, thank you for subscribing, my guy. Pound tier to 0 for life is true. You got to stay under the radar, especially when Hot Chris is around, for sure. But yeah, it looks like some people are trailing off. I get it. I kind of ended the stream. So we'll talk to you guys next week. It is Thursday. It is. So I'll either do a live stream tomorrow, work from home. After staring at a computer screen, I will probably be looking to get a little bit of an outlet. So we'll probably do a stream then. And then also we'll probably do Palantir Weekly if I'm invited, because I skipped last week. So you guys are great. Thank you for always showing up. Really appreciate everybody chatting. Glad we were able to make a little bit out of just a nothing burger and got up to 50 people to help out at some point. But BMY, agreed. One of my buddies keeps poking me about BMY. He says, don't invest in Pfizer. He said BMY is the way to go. So, Steve Lynn, thank you again, my guy. Glad to see you here. And yeah, if you guys have any questions, leave it in the comments down below or hit me up on Twitter. My Twitter's in the description. Otherwise, I will see you guys on the next one. Cheers.